Hello and welcome. My name is Partho Majumdar. I am researching the Indian stock market to work towards my doctorate degree. In this presentation, we will talk about a technical analysis or a technical pattern which is known as the double top formation. Now, the contents of this presentation is taken from two sources. One is a book called Technical Analysis for Financial Markets written by Mr. John J. Murphy. And second is a course taken by National Stock Exchange Academy or NSE Academy titled Technical Analysis. Now, the double top formation is a typical formation which occurs very frequently, and it is a type of reversal patterns. You would know that there are two kind of patterns which is available in the stock market. One is a reversal pattern and one is a continuation pattern. A reversal pattern occurs when the stock rises in a particular time and then falls, or the stock falls at a particular time and then start rising once again. So when the stock rises, it is known as a bullish path. It is known as the bullish path or the uptrend. And when the stock falls, it is known as the bearish part or the downtrend. So when the stock reverses from an uptrend to a downtrend, we call it a reversal pattern. Similarly, when it is in the bearish path and then moves towards a bullish path, that is reverses from a downtrend to an uptrend, we call it a reversal pattern. On the contrary, the continuation patterns are when the stock market moves in a particular direction, either upwards or downwards. So these are known as the continuation pattern. So the important point to note is that the double top formation is a reversal pattern. And in the reversal pattern, for the double top formation, we basically look out for the fact that the stock price is going to fall at the end of this pattern. So we should be careful in terms of investment so that we do not incur too much of a loss. The double top formation typically takes a form where it is in the shape of a M. You can see here, it forms a M. So when you see a M on the chart, then you know that it's a double top formation taking place. Okay, the chart we are discussing are the trend charts. In the trend charts, we will have the time on one side. So here you will have, if it is a daily chart, then you would have the dates, everyday dates, and you would take the closing prices in general cases. So this would be the plotting of the closing prices on this day, and this would be the plotting of the closing prices on this day, and so on. And if it's a daily chart, these would be the hours or minutes or 15 minutes gap, whatever that is. And on the other axis, we have the price. So at this point of time, if it's a daily chart, on this day, this was the price, and on this day, this was the price, and so on. So we will take a deep dive into the double top formation. The double top formation takes place when the stock rises from one point and hits a particular level. This level we know as the resistance level, and after that level, the stock starts falling. So at this point, the stock will start falling, and after falling for some time, the stock will stop at a particular point. This point where the stock stops falling is known as the support level. And from the support level, again, it will start rising and it will stop somewhere close to the top where it had hit. That is the resistance level it had hit. It will not be exactly the same, but somewhere close to the resistance level where it had hit. And after that, it will start falling. Now, this fall, which happens after the second top, is going to be very sharp. And that is why we should be careful while keeping invested in this particular stock, because the price will drop very drastically from the second top onwards. Now, so this is a formation which indicates that the stock price will fall. So that is why we need to take care of this situation. The support level where the first fall stops is known as the neckline or the support level, like we discussed before. So this is known as the neckline. This is a very important point because this will be used in calculations later on also. Now, if the stock falls for a second time from the same resistance level or a similar resistance level, the point where it will cross the neckline is known as the breakout point. So this point is known as the breakout point, and if the stock falls below the breakout point, it is confirmed that the double top formation is taking place. So from this point, the stock price will fall steeply and it will go to a low level. So we have to be very careful when we see this particular pattern. So by definition, a double top formation happens when a stock price hits a similar resistance level twice and falls. Like I mentioned before, this pattern happens very frequently. These patterns happen both in intraday charts and in daily charts. That is, this pattern happens during a particular day of trading. Intraday is when the trading is when we observe the trading within a particular day. In a day's time, this formation can happen, or it can also happen on a long time. That is on a daily charts. If we look at it for a 3 months chart or 6 months chart or a 1 year chart, so this formation happens, and we have to be, and this is very frequent. So we have to take care of this particular formation. Now let us discuss the characteristics of a double top formation. So first characteristic is that the double top formation has got two peaks. So you see that this is two peaks. Now, like I mentioned before, the two peaks need not be at exactly the same level. It can be at a similar level. So you can have a double top formation if it is peaking at one point and then peaking a slightly higher or slightly lower point. So this is also known as a double top formation. So this level, the second top, may be nearly the same as the first top. That is the first characteristic. The second characteristic is that it is a reversal of the uptrend. So you see that it was in an uptrend and then it falls to a very low level. So this is the reversal of a uptrend. Now, when it is falling to a lower level, the point at which the fall crosses the neckline is known as the breakout point, like we mentioned before. And also we call this particular price as the valley price. So this is the valley price, that is the lowest point at which the stock falls before it breaks out. Now, double top formation is very frequent, but many times double top formation actually doesn't happen. So we need to be careful and wait for the confirmation before we conclude that a double top formation is taking place. The first confirmation is that the double top formation always starts with a uptrend. So this is the start of a double top where the trend starts with the uptrend. And like I mentioned before, the shape of the trend is a M, like you will see this pattern. Now, another factor is that the time between the two tops, if it is fairly long, by fairly long, what I mean is that 1 month, 2 months, or 3 months, something like that. So if the time taken between the two tops is fairly long, then it is more or less certain that the double top will take place. Another factor is that, so this is one criteria, that this time taken between the two tops should be high. And also we should look out for the depth of the fall. That is how much the stock falls between the first high and the first low. So if this time taken is more, then the double top is confirmed, and we should know that the double top will continue for a very long time. Also, if the depth is more, then the double top is more or less confirmed, and the more the depth, more long the double top formation will continue. That is, the downtrend will continue for longer time and will reach a new low level. Also, we have to be noticing that along with the trend line, we should plot the volumes. So in a double top formation, when we are close to the first top, the volume of trading will be very high. So here we will see very high trading. As the double top formation takes shape, the volumes will start going downwards. So the volumes will be very low at the second peak, and then after the fall starts, at the breakout point, again the volumes will surge. So from here, again the volumes will surge at the breakout point. So this is another confirmation that the double top formation is taking place. Having understood the double top formation, now let us see how to make buy-sell decisions when we have identified a double top formation. The first decision is that when we identify a double top formation and we notice that the second top is being hit, we should make a sell decision at around about 2 to 3% below the second peak. So when the second peak happens, we should make a sell decision at around about this point where the double top formation has been identified. This is number one. So about 2 to 3% below the resistance level, make the sell decision. Second important thing is that we should keep a stop loss when we are in a buying spree. When the stock is rising, we should keep a stop loss at around about 1% above the resistance level. So when we have got this resistance level identified at the first stop, so we should keep about 1% margin and place a stop loss. Now you would know that stop loss is placed on the broker to reverse your position when the stock prices reaches a certain level. The stop loss basically helps in reducing the investor's loss in a security position. Now, like we've discussed, a reversal is when the direction of a price trend is changed and from going upwards to downwards or from going downwards to upwards. Traders try to get out of the position that they are aligned with a particular trend prior to the reversal, or they will get out once they see a reversal is underway. Now, when the stock price falls below the moving averages, like if we take the moving averages of the stock, it may form a line like this. And if the stock price falls below the moving average line, then we should definitely sell the positions for the stock. For taking the moving averages, if it's a short term investment period, then we should take 50 days moving average. And if it's a long term position, then we should take 200 days moving average. Like we have been discussing, when the double top occurs, the price of the stock will fall. So when the price of the stock falls, this is a good opportunity to buy the stock as well. But at what price should we buy the stock? That is the question. So now in the double top formation, when the price breaks out below the breakout point or the valley price, then we need to find out the depth of the fall. So this is the depth of the fall. Let us call this as D. And this was the valley price, this is the valley price, that is the price V. So when we find this D, that is equal to, now what we do is that we take the highest point where the stock has hit between the two tops. We will call that as H. So when we determine H minus V, that is this point minus this point, this distance becomes equal to D, that is this value. Now what we do is that we subtract D from V, that is from this point we go to this point, that is this is V minus D. This is the level at which we should try to buy the stock once again, or this is the target price at which we should try to buy the stock. Now what happens is that the stock price in a double top formation normally falls up to the target price, and then it may continue to fall further, but after some time, after a short fall after the target price, the stock will start rising once again, and again it will start becoming profitable for investors. So this is the point at which the double top formation formed stocks should be bought. That brings us to the end of the discussion on double top formation. I hope you found this video useful. Thank you for listening. Have a good day.